Hello guys, welcome back to another episode of Paris and Baz Cast, where we bring to you weekly guest speakers to talk about topics that impact property management, sales and finance. Today we have Jay Anderson. Hello.
Hello, thank you for having me.
Jay Anderson from Jay Anderson Property. There you go, very original.
Yeah.
Talking about commercial investing. It's
a bit of an introduction, Jay.
Yeah, so my name's Jay from Jay Anderson Property. I'm a property buyer's agent, and we specialise in acquiring high-performing residential and commercial property right around the country.
Yeah.
A lot of investment stuff. Do a little bit of own-occupied, but predominantly it's investment.
Yeah.
Right.
And we first met Jay at a property that we were selling in the Hills District, which was good.
That's correct.
So it's always good to connect with local buyers agents that have properties, that have a client looking for owner-occupied properties as well. So that's definitely a service that you also provide.
Yeah, that's correct.
Absolutely.
So investment, owner-occupied.
Investment
Yeah.
and owner-occupier. There you go. Okay, so in terms of buying commercial property, so I guess starting from the bare basics, what should a person be looking out for when looking for commercial property?
Location.
Yep.
You know, they do say with it residential as well, it's location, location, location. But with commercial, you know, it's very, very important. And you almost need to think of it in reverse. You need to think about who's going to be the tenant occupying the space,
Yep.
or if there's a tenant already in there.
Yep.
If or when they do leave,
Yep.
what style of business is the next tenant going to be?
Yep.
And think about where would the ideal location for that business type be. So location is very, very important.
Yep.
Tenant demand in the area,
Yeah.
the likelihood of longevity of that tenant in that area.
Yep.
So is there ongoing demand and growth for that type of business or that service?
Yep.
Making sure we're not, buying a commercial property that's maybe only there or dependent because of a one-off major event or large infrastructure project.
So it's long-term, basically.
Exactly,
Yeah.
we want to make sure that there's longevity there.
Yeah.
What would be an example of a short-term in terms of based on an individual?
So something maybe like the Commonwealth Games.
Yeah, sure. Yeah.
Yes, there's huge
yeah,
influx of, there might have been a lot of industrial units being leased out to support the construction there.
Yeah.
A lot of media events, I've noticed, they come for a short term.
Yeah.
Yeah.
When the event's over, and they pack the
Yeah.
bags. Yep.
Makes a difference.
Market saturation of that business type as well.
Okay.
So let's take an example of motels.
Yeah.
So you could buy in a regional town that has a lot of demand
Yep.
for motels, but
Yep.
there's a market saturation of motel rooms. So there's a lot of competition. There's going to be undercutting all the rest of it.
Yep.
Essentially want the business that's going to be in there to be able to perform well long term
Yep.
and make a lot of money in that location, and then
Yep.
they're going to stay there.
Yep. Yep.
So they can basically
100%.
dominate the area.
Correct, yeah.
Yeah.
And then other things we look for is, when you do go to sell a commercial property, it can take longer than residential. So start thinking about exit strategies right from the beginning.
Yep.
Think, well, what's the long-term strategy?
Once
When I
you're
do want to exit,
Yep.
what's the plan? How easy is it going to be? Because it can be very easy to get caught up in chasing strong net yields in commercial.
Yep.
But you need to think about, exit strategies.
Which is
Yeah.
very important, especially if your cash is tied up in the property.
Exactly,
Yeah.
yeah.
So what would be sort of an average, like, so say for example, a residential is sort of 4 to 6 weeks is a good campaign. What would be a commercial be sort of?
High sought after office stuff. It can be the same, but other times that you can be 6-9 months as
wow.
well. Especially for the higher price point,
Yep.
stuff like that.
Yeah.
The biggest killer in commercial property is vacancy.
Yes.
So
100%.
we need to
Costing
think
money.
about risk mitigation, about minimising vacancy as well. So all of that's very important to map out and
Yep.
strategise before you go out and even start looking.
And I guess the other thing would also be the existing lease and the lease term, the options to secure the tenure, because even from a rental perspective, as we were talking earlier, is that if it is a long-term lease, with the annual increases or whatever the increases would be with CPI, the rent is overinflated by the time the lease ends. So by the time you go to market again for another tenant, you may not be able to get the same return.
Yeah, and that's very true, especially if you're going to buy a property that's got a great yield because it's overinflated rent.
Yeah.
But if the lease is going to expire in 2 or 3 years,
Yeah.
like you said, you've got to make sure that what the market rent that you're going to be able to get
Yeah.
is still
Gotta
going to
be
make
lower.
sense on its
Yeah.
own.
Yeah, and also allow for rental incentives, rent relief periods. So all of those things need to be in the feasibility when you're looking at purchasing.
Yeah, I think a lot of buyers get caught up in that with the
Yeah.
yields.
Yeah.
Yeah.
So in plain numbers, I guess just an example comparing residential to commercial from a yield perspective. Say, for example, you are purchasing in Sydney. A normal yield for a residential, depending on the property type, like say 500,000 would be sort of 2%, 2 to 3% on average. What would that be? Say if you were to invest 500,000 in commercial, what sort of on average? Obviously, it would vary.
Yeah, I guess a lot of the stuff that we buy, so we've got a strong focus on medical and accommodation assets.
Yep.
If it's office space, it's standalone, smaller properties.
Yep.
But the yields we're getting are kind of 6.5% to 8.5%.
Wow.
But that's net yield,
Net.
which is interesting because in residential we talk yields, but it's in a gross.
Yeah.
So in commercial it's net. So
Yeah.
when you're talking 6.5% to 8.5% net,
That's 12
with
plus,
all the outgoings typically paid as well by the tenant, in terms of cash flow, it can be fantastic.
Yeah. And in terms of commercial property, when we look at like business parks or standalone, what's your take on that?
Yeah, so I'm not a big fan of higher density office buildings, and I guess the reasons for that is limited scarcity.
Yep.
And the types of businesses that are going to occupy these premises are typically not tied down to the location. So what I mean by that, if there's nothing really stopping them going and leasing another office space across the road or upstairs or downstairs, and it's not going to have a huge impact on their business. But if we could buy a commercial property that's a standalone premises in a prime location, much more likely that tenant's going to be tied to that location because there will be an impact to their business if they pick up and move.
It's not in close proximity.
Yeah. And when you are recommending commercial in properties, what sort of areas are currently would be the go-to places from a return point of view?
Yeah, it's Sydney. We'll start off in Sydney because that's normally what everyone wants to know.
Yeah.
Surrounding major infrastructure projects like Badgerys Creek, West Connects, and you think about like motorways and transport hubs and nodes. Any industrial stuff or logistic parks, stuff like that, where they've got a big need for access to those transport locations. So that's certainly. You've got areas like Liverpool. Federal and state infrastructure spending in Liverpool is somewhere in the scope of $20 billion.
Wow.
So there's huge stuff happening out there.
Yeah, and that's including within the Badgerys Creek area as well. So there you go.
If we go to say Brisbane, which we're doing a bit of buying, any of that fast urban growing areas where you've got strong population growth, you've got infrastructure spending, you've got the population demographics to support that area or the property type. So if we look at say medical, if we look at areas where maybe got an aging population, medical, it's a non-discretionary spend for Australians as well. So it's a ever-growing demand on the medical industry. And then major regional hubs around Australia as well. So stuff that's got a diverse local economy, so not dependent on single industry. Typically we look for a minimum population of about 30,000. And a regional hub that's supporting the greater area, essentially. So there's some good yields in regional.
And in the last couple of years, what I've noticed is the residential property, when it's been on the decline, commercial's been pretty strong performing.
Yeah.
Would you agree with that?
Yeah, definitely. And the interest level in commercial is certainly growing. I think previously it was thought of more of a sophisticated investor or institutional investor. But with more and more baby boomers getting ready to transition into retirement, a lot of them are big incomes. They might be asset rich. They want to maintain the same lifestyle that they've got now. But if they retire, they're not going to have that cash flow to support it. So a lot of them are looking at maybe selling down some of their residential and buying commercial so they can fund basically their ongoing.
What I'm noticing with a lot of my clients, they're buying through their super fund as well, commercial property. Long-term investment, and it's growing. So.
Yes, and there's certainly some benefits in that on its own. Whilst we can't give specific taxation advice, just talking facts, buying in a superannuation fund, commercial property, certainly it's an attractive tax environment.
Yeah.
And then the other big one is you can buy, if you're a small business owner, you can buy your business premises in your self-managed super fund and rent it off your self-managed super fund at an arm's length at market rent.
Yep.
So there's certainly a lot of small business owners doing that.
Benefits there.
Very good.
In terms of talking about the per square metre or the sort of the rates, like what determines the cost? What are the factors that determine what a per square? Because obviously here we were talking earlier, business park is ranging anywhere from 8,500 to 10,000 a square metre. Other areas are probably around the 5,000 square metre. What are some of the factors that impact the rate?
Location. The condition of the property, the age of the property, surrounding tenants, any services that might be included. It's a concierge at the front desk or whatever it may be that may impact, and then sometimes even specific terms within a lease can all impact. But typically a good, easy way to, I guess, have a look what is in the area is just have a look online. See what properties are listed for, comparable size, usage. So make sure you're comparing apples with apples, and use that as a bit of a benchmark to see kind of
And when we say outgoing paid by the tenant, just clarify that.
What exactly
normally involved, because normal residential investors wouldn't know.
So it varies depending on the terms within the lease agreement itself. But in many cases, it's repairs and maintenance. It might be fit out costs. Can be even building insurance, stuff like that, or in some specific industries, say the motel industry, it's not uncommon for the tenant to pay 100% of outgoings, including the landlord's building insurance, and even in some cases building the owner's land tax liability. So in that instance, the landlord is really only responsible for major structural repairs and stuff like that. So
and also when leasing out, say, a blank canvas strata property, when they make due to the property, they have to give it back in the same condition.
Correct.
Part of the lease as well.
And in terms of property, one of the questions we had asked was that is it better to have a already tenanted property or have something that you can freshly rent out depending on what usage there is and change it?
I guess it really depends on the individual investor and their risk tolerance as well. The good thing with a tenanted property, especially if you get a tenanted property that's on a long-term lease, you know what the income is going to be.
Very guaranteed.
It's kind of guaranteed, right? You can forecast your cash flow, the rest of it. However, because a commercial property value is typically based on the rental return or potential rental return, if you get a vacant property, you can a vacant established property, you can get at a substantial discount to a tenanted property.
Right.
So if you could buy a vacant premises, get a tenant in there paying good rent and a long-term lease, you can substantially increase the value of the property in a very short amount of time.
That's a great point. Build equity straight away.
Exactly.
And we've talked about outgoings, super funds. Is there anything, I guess, in terms of finance for commercial, do you want to touch a bit more about that, of exactly what that involves, of how easy that is to get, and what sort of LVRs or percentage that you have to put your own?
So there's a number of lenders we deal with, basically for commercial. The second and third tier lenders. A couple of the major banks have stood away from, especially SMSF lending. We're seeing LVRs anywhere ranging from 60 to 75%, potentially 80% as well, depending on the transaction type. Is it a strata property, warehouse, industrial, and whatnot? So there's a lot of properties out there. I think the banks are hungrier for commercial business these days, especially since the Royal Commission. They want to help the small business owners. That's what I'm seeing. So we're getting deals over the line. And
what sort of interest rate, like a rough guide?
It depends on the overall strength of the application, but anywhere ranging from 3.89 to 5.5%. Depends if we're buying through a trust, company, or super fund.
So not so different from a residential then.
It's not far away. Obviously residential rates are significantly cheaper, low threes.
And it's interesting as well. I guess a number of the different lenders have a different appetite to commercial and the usage of the commercial property as well. So I think extremely important to, I guess, use a commercial experienced mortgage broker as well, like yourself,
Yeah.
so you know which lenders to go to, depending on the property type and the strength of the application. So it's
because what we see with commercial loans, when we lodge the deals, they take a longer time to get approved compared to a residential loan. So customers are sometimes unaware of that.
Yeah.
So it's very important to go to a broker that knows what they're doing.
Because the other thing that's also considered a commercial purchase from a loan perspective is display homes.
Yeah.
So we're selling one at the moment where the finance is being done through as a commercial purchase because it is a business that's being run at the property, although it's residential, which is fine. There's a few different variances.
And that's why a number of the buyers have become unstuck on that transaction because they thought they could get a normal home loan, whereas it is a commercial loan.
Yeah.
As we say.
Yeah.
So there's only a couple of banks that are doing the display home.
Yeah. Perfect. Is there anything else we've missed? Anything else that we can add?
Maybe, I guess, another thing for investors to be mindful of when they're buying a commercial property. The lease agreement is such a critical part of the purchase, especially obviously if it's already tenanted. And I guess the top things to kind of look out for are repairs and maintenance clauses. See who's liable, outgoings, rent increases. Is it by a fixed amount? Is it by CPI? Is there market rent review clauses? If there is there a ratchet clause to ensure that the actual rent can't go backwards? Outgoings. So it's very important in that sense to get an experienced commercial property lawyer to have a look at the lease. Because, you can see people that fall over. They might just get a normal conveyancer or something who might have a little bit of experience in the actual transaction of the purchase, but having someone really look at the lease agreement itself, because you can get unstuck quite easily.
That's very important in commercial.
100%.
Yeah.
Perfect. Well, thank you so much for your time.
No, thanks for having me.
Awesome. Any other questions, feel free to send us through. We've got Instagram, Facebook page and our personal profile going. We're more than happy to help you out. Thank you so much for your attention, and we'll see you guys next week at 3 p.m.